In 2007, Jeff Bezos, founder of Amazon, one of the richest men who had ever lived, paid $0 in federal income tax. Not 0%, $0. That same year, his wealth grew by approximately $4 billion. In 2011, Warren Buffett, the third richest person in America, famously pointed out that he paid a lower effective federal tax rate than his own secretary. He called it obscene. In 2018, Elon Musk paid $0 in federal income tax. The same year, he was worth approximately $20 billion. None of this is illegal. None of it is the result of clever accountants finding loopholes in obscure corners of the tax code. It is the direct, predictable result of how the American tax system was designed, or more accurately, how it was allowed to evolve without ever being fixed. In 2021, ProPublica obtained a massive trove of IRS data, actual tax returns for the wealthiest Americans, and published the numbers. The 25 richest Americans had paid a true effective tax rate of 3.4% on their accumulated wealth between 2014 and 2018. 3.4%. The average American household pays around 14%. To understand why billionaires pay so little in taxes, you first need to understand one fundamental fact about the American tax code. Income is only taxed when it is realized. When you earn a salary, your employer withholds taxes before the money reaches you. When you sell a stock for a profit, you pay capital gains tax on that profit. The tax system is built around transactions moments when money changes hands. But the way most billionaires accumulate wealth does not involve transactions. It involves appreciation. When Jeff Bezos founded Amazon and held onto his shares, those shares increased in value by hundreds of billions of dollars over decades. He never sold them. Therefore, in the language of the tax code, he never had income. The $4 billion his wealth grew in 2007 was, technically speaking, an unrealized gain, a number on a spreadsheet, not a taxable event. This is not a loophole. This is the foundational architecture of American tax law, established by a Supreme Court decision from 1920 called Eisner v. Macomber. The court ruled that appreciation in the value of an asset is not income until it is sold. That ruling has shaped tax policy for over a century. The result is extraordinary. As of 2022, America's billionaires and centimillionaires, those with at least $100 million in wealth, collectively held approximately $8.5 trillion in unrealized capital gains. $8.5 trillion that had never been taxed and under current law may never be. Of the $4.3 trillion in wealth held by U.S. billionaires, economists Emmanuel Saez and Gabriel Zucman of UC Berkeley estimate that approximately $2.7 trillion, nearly two-thirds, consists entirely of unrealized gains. Two-thirds of billionaire wealth has never been taxed, and as long as it's not sold, it never will be. But wait, if billionaires never sell their assets, how do they live? How do they buy yachts, mansions, private planes, and everything else that enormous wealth provides if they never generate taxable income? The answer is a strategy that financial advisors and tax lawyers call buy, borrow, Die. Step 1. Buy. The ultra-wealthy invest their money in appreciating assets, stocks, real estate, private companies. They do not sell. The assets grow in value without triggering a tax event. Step 2. Borrow. When they need cash, they do not sell their assets. They borrow against them. A bank will lend a billionaire 70 to 90% of the value of their portfolio, using the stocks or real estate as collateral. The loan is not income. Loans are not taxable. The interest on these loans is often lower than the rate of return on the underlying assets. So the billionaire borrows at, say, 2 or 3%, while their portfolio grows at 10 or 15%. They are getting richer while they borrow, and they pay no income tax because they have no income. Step 3. Die. When the billionaire eventually dies, their heirs inherit the assets. And here is where the most profound feature of the tax code takes effect. Under a provision called the stepped-up basis, when an asset is inherited, its cost basis, the price from which capital gains are calculated, resets to its value at the moment of inheritance. This means that every dollar of appreciation that occurred during the original owner's lifetime simply disappears for tax purposes. If Jeff Bezos had held Amazon shares since the company's early days, shares worth pennies per share, and the buy, borrow, die strategy is the foundation. But the ultra-wealthy have additional tools that can eliminate even the small amounts of tax they might otherwise owe. The Roth IRA maneuver. Peter Thiel, co-founder of PayPal and one of the earliest investors in Facebook, opened a Roth IRA in 1999, a type of retirement account designed for low and middle-income savers to shelter modest contributions from taxes. Thiel placed shares of the company that would become PayPal into the account, valued at fractions of a cent each. Those shares grew. By 2019, Thiel's Roth IRA was worth approximately $5 billion. Because of the account's tax-exempt status, all of that growth, $5 billion accumulated over 20 years, was entirely tax-free. The account was designed to help a teacher save $50 a month for retirement. Thiel had used it to shelter $5 billion. Real estate depreciation. Real estate owners are allowed to claim depreciation on their properties, a deduction that treats buildings as if they were losing value even when they are gaining it. For large real estate portfolios, these paper losses can be large enough to offset enormous amounts of income. Stephen Ross, the real estate developer who also owns the Miami Dolphins, went 10 consecutive years paying zero in federal income tax, despite a net worth of billions. Sports teams. Owners of professional sports franchises can depreciate their team's player contracts and other assets in ways that generate substantial paper losses, allowing them to offset income from other sources. In June 2021, ProPublica published what it called the secret IRS files, a massive leak of actual tax return data for the wealthiest Americans, covering the years 2014 through 2018. The numbers were extraordinary. The 25 richest Americans had seen their collective wealth grow by $401 billion during those 5 years. They had paid $53.6 billion in taxes on that growth, a true rate of 13.3% lower than the average rate paid by American households earning between $75,000 and $100,000 per year. But that was the average across the 5 years. In individual years, the numbers were more dramatic. In 2014, Bezos reported $2.4 billion in income and paid almost $104 million in federal taxes, a rate of about 4%. His wealth grew by approximately $3.8 billion. The tax he paid represented less than 3% of that growth. In 2007, Bezos's wealth grew by approximately $4 billion. His reported income was $46 million. He took enough deductions to reduce his tax bill to zero. Warren Buffett, who had publicly advocated for higher taxes on the wealthy, paid $53 million on a true income of $25 billion over those years, a rate of approximately 0.1% on his actual wealth gains. The response to ProPublica's reporting was immediate. Republicans accused ProPublica of illegal receipt of stolen government documents. Democrats proposed new taxes, a minimum tax on billionaire wealth gains, a tax on unrealized appreciation, a repeal of the stepped-up basis loophole. None of these reforms passed. The tax code, as of this recording, remains unchanged. The episodes on this channel have covered frauds, crimes, people who broke rules, manipulated markets, stole money, and were prosecuted or not. This episode is different. Nothing described here is illegal. Every strategy, buy, borrow, die, stepped-up basis, Roth IRA manipulation, real estate depreciation, charitable foundations is explicitly permitted by the tax code. In some cases, actively encouraged by it. What makes this the most disturbing episode of the series is precisely that. When Enron committed fraud, executives went to prison. When Bernie Madoff ran a Ponzi scheme, he died in prison. When FTX collapsed, Sam Bankman-Fried received 25 years. The system, however imperfectly, responded. The system of billionaire tax avoidance has generated no prosecutions, no prison sentences, no meaningful reform.